the platform's native stablecoin against multiple collateral positions, allowing them to utilize their holdings without selling them. How many times have we said, right? We're in a game, we're entering into an era where you don't have to sell your digital assets anymore. Okay. And I think the more that people comprehend that and build strategies around that and instead turn their mindset from I'm going to sell for some high fiat price to how can I generate more cash flow with my assets, we're going to be the ones that survive long term. Alrighty, cool. So in today's video breakdown, we're going to be going over a couple of different DeFi protocols on Aptos. At the very beginning, I want to kind of sift through and talk through my DeFi approach utilizing Aptos, but then this will kind of give you a broad overview of how I treat DeFi in my seven-figure portfolio. Um, and just so again, just being transparent with you guys and trying to show you all strategies that I partake in, how I diversify my risk, how I diversify in protocols, and how I split apart my assets so that way you guys can, start to generate your own strategies and your own way of thinking in this DeFi ecosystem to mitigate risk and maximize rewards. Okay. And then in the second portion of today's video breakdown, I want to go over some um, really interesting fundamentals in depth surrounding Aptos. So I want to read thoroughly through some recent achievements. I want to thoroughly read through some recent announcements and then take a look at some other interesting things that were also recently announced. And then we'll throw a little bit of Say in there, like I mentioned, because Say and Aptos seem right now to be playing on like a level playing field, bouncing things off of each other that are coming up in similar fundamentals. So I'll show you guys a little bit into that in the second portion, but first we'll talk DeFi. So this is my diversification strategy using Aptos. And like I mentioned, first, not financial advice. This is personally what I'm doing. You guys need to always assess your own personal risk properly and understand the risk involved with participating in DeFi, which is why I take this type of approach, right? To mitigate that risk while also exposing myself to yield generation. So, right here on the left-hand side, we have the original batch of my portfolio in Aptos, right? So if I just, as an example, have $100,000 invested into Aptos, I split that up into different categories between low risk, medium risk, and high risk. So I proportion that $100,000 in different strategies in the DeFi ecosystem. So starting always with my low risk approach. So a portion of that $100,000 invested into Aptos, in this case, 50% of my portfolio is allocated to my low risk approach. And so this is where 50% of my Aptos holdings are reserved for capital preservation. In case anything goes wrong with my medium risk or my high risk strategy, I always have assets to fall back on and I never get wiped out from the markets. Okay. I'm always a market participant by making sure that I'm diversified on different cold storage platforms, different wallets, so on and so forth. All right. And this is again 50% of my portfolio in this low risk portion. This proportion is sitting in cold storage or it's staked directly from within a wallet or a centralized exchange. Now, a lot of people don't like that term centralized exchange and they don't like having their assets staked on a centralized exchange, but it gives you somebody to point the finger at if something goes wrong. And centralized exchanges that offer yield generation through staking mechanisms right now, like Coinbase or Uphold, they don't really want to saturate their reputation. So if something does go wrong, you have somebody to point the finger at, and they're most likely going to compensate their users in the future. So it's not insurance by any means, but again, that's why I put it in the low risk approach because it gives you somebody to blame if something does go wrong. Outside of that, I personally don't participate in centralized exchanges. If I'm buying on a centralized exchange, I remove my assets from the exchange as fast as possible. I will never stake on a centralized exchange or yield farm or anything like that on a centralized exchange, but I thought that I'd throw that in there just to be transparent. So that means for my low risk portion allocation of my Aptos in this case is sitting on a cold storage wallet or it's sitting directly in a wallet like Petra that is earning directly from the wallet in the wallet that's connected to a ledger. Okay. For my medium risk approach, and out of that $100,000 investment into Aptos, I take 25% of that and I allocate it to my medium risk approach, which is Aptos that is deployed into DeFi protocols, but in a conservative way. So staked through a wallet that is connected to cold storage and connected to a protocol, or just staked in a wallet connected to just cold storage and not a protocol. So in this case, Petra, right? You can stake Aptos directly through the Petra wallet and connect it to your Ledger device. Um, and then if you are connected to a protocol like Omni's Finance, you receive a liquid stake version of your Aptos, but you don't do anything with that liquid stake token. All right. And so that's my medium risk approach. And 25% of my portfolio in Aptos is allocated to this medium risk diversification. Okay. So that means I'm on a Petra wallet connected to a ledger with the liquid stake token that I got from Omnis Finance, which is a liquid staking protocol on Aptos. And I'm not doing anything with the liquid stake token that's sitting idle in my wallet, and I'm just generating yield. Okay. Now, my high risk approach is the extra added layer that boosts rewards, but then also increases your risk. And that is and gets another 25% of my capital initially invested into Aptos allocated to it. So the remaining 25% is where I seek higher yield in exchange for higher risk. I take, in this case, my liquid stake Aptos and I actively use it in the DeFi ecosystem in strategies such as restaking, yield vaults, lending, borrowing, or providing liquidity. In this specific example, and what I'm predominantly fixating on doing right now is lending. Okay, just lending out my liquid stake token and earning additional yield on it, not borrowing against it, not providing liquidity with it or anything like that, just lending it out. And so I'll get into that and what platform I'm taking a look at utilizing here in just a second. And so just to wrap this up, this proportion of my portfolio is exposed to things like more smart contract risk and permanent loss if I'm being a liquidity provider. And then also overall market volatility. If I decided to swap that into my liquid stake token, I decided to swap it into another asset, you're exposing yourself to more risk. So you just need to understand that. All right. So off of my initial capital allocated to Aptos, this is how I diversify inside my portfolio. So think about this in terms of like XRP in the future moving forward. I'm going to run this same strategy. If I have, $500,000 invested into XRP, well, half of that, $250,000, isn't going to be touched. It's going to be for long-term cold storage. If it ever hits the fan and goes south, I have a bag to fall back on and it doesn't get touched and it's protected. It's reserved in cold storage or institutional fire block security or something like that, right? Institutional custody, and it's just doing nothing. And I'm okay with that, right? Because it's security. Then 25% of that is going to a medium risk allocation for XRP, and then 25%, another 25% to high risk for that maximized yield generation. Okay. So same principle, and I just wanted to kind of walk through for this for anybody that's a beginner that thinks that they need to allocate all of their portfolio to DeFi or all of their portfolio to trading or all of their portfolio to cold storage. You can diversify your overall bag. Okay. And don't get discouraged by my numbers just because I have seven figures in my investment portfolio and you might not, doesn't mean that you're not an investor or that you're any better or lesser than myself, right? We're all here to and with the same goal, and that's to make money. Whether you're making $1 a day or $100 a day, it's the educational process that is powerful and the ability to just become your own sovereign citizen, right? Have control over your finances directly through an internet connection and a mobile device. Okay, that's powerful no matter what the value is behind that. The fact that you know how to do that or know of that, if you're not participating in DeFi, but you're actively learning, it's powerful. So use that as motivation to drive your momentum forward. Moving on, let's go down the rabbit hole, talk about some DeFi developments on Aptos before we jump into the fundamental read. So this is from Haley Aptos on X. Shout out to Haley. I always like to give other influencers. I think that this is a person in the Aptos ecosystem too, a shout out. And she mentioned, should we just rename some different things that have happened on the Aptos chain recently? She delivered these weekly metrics and recaps for everything Aptos that has just recently taken place. So just to show you guys, June was a astronomical month for Aptos. If you guys don't or have not done research on Aptos, I'm not trying to shill it to you guys. I just have recently done a lot of research on Aptos and have become excessively bullish on it. Like I feel like not enough people are paying attention to what they're doing and what they have done and who created Aptos. So definitely tap in if you guys don't know about this project yet. June saw Aptos DEX volume reach a new all-time high of $3.5 billion, which is a $500 million increase since the start of the summer. Hyperion XYZ, which is a DEX built on Aptos, surpassed $5 billion in volume, up $2 billion in just 2 weeks when it previously broke $3 billion. But they're not stopping there. Hyperion daily DEX volume hit an all-time high last week, while TVL went above the $120 million threshold for the first time in history. Stable market cap on Aptos hit an all-time high of $1.3 billion on June via token relations related Aptos climbing to the top 4 chains by USDT supply. Aptos is the number 1 chain by fee, growing plus 78% over the past 7 days, according to Nenson AI. And Aptos currently ranks 5th in daily activity users across all L1s, nearing 1 million active users. More than 4 million Aptos has been staked with Ko-Fi Finance. We'll get into that in just a second, since it launched in mainnet just over 1 month ago, which is a lot of money. The value of real-world assets on Aptos surpassed $430 million, a new all-time high, and 25% growth in the past month. Okay, so right now I believe Aptos is one of the top ranking protocols for real-world assets being or coming on chain. You guys could probably fact check me on that, but I'm pretty almost 110% sure that Aptos holds the record right now in the top like 4 or 5 protocols that have real world assets on chain. Maybe we'll get into that. I think I might have a fundamental open on that in just a second. So just taking a look at some of these protocols, Hyperion, right? Building the unified liquidity and trading layer of Aptos backed by OKX Ventures, Aptos Labs, Marina Ventures, and Maelstrom Fund, which is a, I believe, private family office, if I'm not mistaken. Yeah, family office fund. Now, here is the DEX itself, building the premier liquidity hub, on Aptos with right now $126 million in total TVL. And the total volume right now is at what is this? 5,738.6 million. Okay. Thought that said 5,738, but then I see the M there, right? So lots of total volume on here, lots of TVL, a platform where you can come, you can provide liquidity, you can do all kinds of things, swap, earn features. There's different pools, there's different vaults on this platform. Not financial advice, but just another platform that in the Aptos ecosystem that seems appealing. When you click here, you go to the pools feature. We've been advocates of trying to find good liquidity pools for stable coins. Well, right here at the very top, you have a USDT, USDC pool that's offering a 25% APR. Okay, not anything substantial by any means. 25% though is appetizing in my personal opinion, and there's healthy TVL and volume in this pool, right? There's other pools as well that you guys can take a look at, right? Lots of staking or liquid stake pools. For example, here is an Aptos STAPT pool with $3.36 million in TVL. Here's an Aptos AMPT pool. You got Aptos USDT, so on and so forth. So definitely take a look at this platform if you are a liquidity provider, because there are lots of different options here for Aptos users. Ko-Fi is that one platform that the lady mentioned in her post. Here it is right here. Something to note about this particular protocol is that if you're in the United States, you will need a VPN to access it. Now, personally, I don't utilize a VPN. That's just my personal decision. So I'm not able to actually open up the application itself to show you guys the staking potential and the rewards, but I was able to open up the documents where you can read a little bit about this platform. This platform, interestingly enough, was only launched, I believe, a month ago and has superseded a significant amount of TVL already on the platform. So it just goes to show the demand for Aptos DeFi primitives. This is a next-gen liquid staking platform on Aptos, Coffee or Ko-Fi. I don't know how to pronounce that, but they have a little tiny picture of coffee there. So I'm just going to go ahead and assume that that's how you pronounce it. It is a next-generation liquid staking platform on Aptos, allowing Aptos users to earn boosted staking rewards through Coffee's dual liquid staking model, KAPT and STKAPT. Ko-Fi or Coffee offers boosted liquid staking whereby Coffee's yield-bearing stake assets provide stake yields as a base layer yield with additional boosted rewards accrued on top of it. I'm pretty sure, if I'm not mistaken, when I was on a call last night with Aqua, he said that you can earn upwards of 9% on these liquid stake tokens. I just, again, because I don't use a VPN, couldn't actually open up the application as it's not available for United States-based users unless you choose to take a VPN route. Moving on. Okay, more so into the strategy that I'm going to be attempting to participate in with my more high risk allocated portion of my portfolio. So Aptos posted this the other day. Congrats on launching on mainnet and unlocking the next generation of DeFi on Aptos, Oro Finance or Oro Finance. Oro Finance is now live on mainnet. And so if we come over here, this is the Oro Finance overview. And so just to take a look at this and read some of the docs so that you guys understand what this platform is, Aura Finance is an advanced DeFi protocol that enables users to gain rewards and liquidity from their staked APT without any lockups. Let me mute you guys real quick. I can hear some background noise there. Sounds like somebody's opening a wrapper. Without any lockups through Oro or Aro, however you pronounce that, finance, users can borrow USDA. That's going to be interesting right there because there is a significant amount of APR or APY attached to this. The platform's native stablecoin against multiple collateral positions, allowing them to utilize their holdings without selling them. How many times have we said, right? We're in a game, we're entering into an era where you don't have to sell your digital assets anymore. Okay. And I think the more that people comprehend that and build strategies around that and instead turn their mindset from I'm going to sell for some high fiat price to how can I generate more cash flow with my assets, we're going to be the ones that survive long term. I'm just going to go ahead and stamp that. RO Finance is committed to supporting the DeFi ecosystem on Aptos as a whole, driving growth and innovation through its unique model, where their goal is to be the primary liquidity gateway for both new and established protocols, offering attractive rewards that add value to users and strengthen their broader ecosystem. So, just some interesting doc to read. I'll obviously, of course, send all this to you guys in the Discord so you can do your research. But taking a look at some of the opportunities, what I plan to do is participate in utilizing my STAPT as collateral and depositing it, lending it out, and earning 44.75% on it. So right now, what I'm doing in my medium risk portfolio is I've come over here to Omnis Finance after connecting my Petra wallet that's connected to my ledger, and I've staked my Aptos for 7.28%. And in return, on this liquid staking platform, which is the biggest liquid staking platform on Aptos with $166 million in TVL, you get in return this STAPT token. And so in my medium risk portfolio right now, this STAPT token is doing nothing. It's just sitting in my wallet. But allocating to my high risk portion of my portfolio, I'm going to actually take this STAPT token and you can come over here and you can do multiple different things with it. All right. Just as an example, a portion of what I plan to do with my STAPT token is I plan to come over here, like I said, deposit it, lend it out, and you can earn 44%. Right. Now, there's other features that you can partake in here as well. If you head over to the dashboard looks excessively clean, right? You have all the money that you borrowed, net APR that you're going to be receiving, the total value of your positions, your different positions listed down here. If you come over here to the stake feature, they have some staking options that seem very appetizing right now, primarily probably because they just launched. It's looking like they're offering a high incentive APR for people to come and stake their native asset, Aura, on their platform. And right now you can see the total value of the staked Aura on the platform and the total supply, which I find interesting, again, just as an option if you decide to progress with this platform. If you click on the rewards tab here and you scroll down, you can see right here where it mentions your ability to borrow the USDA. That's offering a 69% APR right there for the native stablecoin on this platform. Then also down here, it mentions the STP as collateral, the 44% APR, and has a nice little deposit tab right down there. So again, a platform that I'm very interested in earning extra, more high risk oriented rewards on, exposing myself to this platform in the near future once maybe 2 or 3 months passes and some more TVL comes on the platform and I see some more developments and posts from their social media. Okay. But just an option. Another option that you could partake in that Aqua had mentioned yesterday is taking your STAPT token or your liquid token and swapping that out for an asset and purchasing NFTs with it. Okay. So moving on here, just for anybody that is interested in the Aptos ecosystem, this is a platform or a protocol that looks like it might be efficient and effective for Aptos users. It says here, Panora, introducing Panora flows, an Aptos native primitive that redefines cross-chain liquidity, where users can bridge, aggregate, and swap across 10 plus different chains into any Aptos token on one seamless flow. No need to hop across multiple bridges and dexes, no manual routing, and zero friction. So just for anybody that needs an efficient and effective bridge to swap, trade, do all these things with their Aptos token, here is a platform built directly on Aptos where you can do that. I'll actually go ahead and give them a follow. Okay. Now, also, Aptos released this in June as well on the 26th, where they said that the AIP to deploy Aave v3 on Aptos mainnet has passed. So I'm just going to go ahead and assume outright that we're waiting for this to launch to see if it actually fully comes into fruition, which I'm just going to go ahead and assume that it will in the near future moving forward. So definitely something to be paying attention to. Aptos's integration with Aave and how that all plays out. Okay. To continue down the rabbit hole, as I mentioned, taking that liquid stake token and swapping it out for maybe a stable coin or swapping it out for Aptos and then taking it over here to Wapal. This is just another high risk strategy that you can partake in. Once you get your liquid stake token, you can come over here and shop around in NFTs, right? So you can purchase yourself some NFTs. Again, they're going to be subject to the volatility of the native asset Aptos and the price of these NFTs, but still an option. And so Loonies is one of those NFT platforms on Aptos that offers staking, where you can purchase NFTs and you can come over here on the Loonies platform and you can put them to work, right? By acquiring points that allow you to participate in the spin feature on the Loonies platform, where you can win rewards and claim prizes that pay you out directly in Loon or Aptos. Okay, so just another example of how you can put your liquidity to work in a constant loop. Just as an example, not something that I'm participating in right now. All right. There's another platform that was recently announced by Hyperion, interestingly enough, the DEX that we had covered a second ago, where they said, this is huge news for the entire Aptos ecosystem. Echo Protocol is the first Aptos project to be featured on Binance Alpha. Echo Trading opens the 2nd of July. So this is not launched yet. This is launching tomorrow as of time of recording this. And Alpha Points airdrop claims will follow. I personally don't participate in any airdrops, and I would suggest that you do so cautiously, but still something interesting that is set to launch. Echo Protocol, which is a Bitcoin liquidity and aggregation infrastructure powered by BTCFi on Move, where BTC meows better on Echo according to their X profile. And this is their protocol right here, where users are going to be able to come over on the Aptos chain and earn yield on their Bitcoin, which I think is a huge portion of how this DeFi infrastructure is going to transform over the next consecutive couple of years. It's users, whales that have held BTC for years and haven't been able to do anything with it can now put that liquidity to work. Okay. And they're going to be able to do that on Aptos, which I think is cool. So I thought that I'd throw that in there and just here's some of the documents here for the Echo protocol. Definitely something to take a look at as they were just announced and listed on a feature fundamental article from Binance. Moving on. All right. So that's the protocol aspect of today's breakdown. Just some things that I wanted to introduce you guys to. I will make sure to drop all those links in the Discord after this call so you guys can check them out yourselves, read through the documents, do your own digest, look at the audits, look at the TVL, digest your own personal risk, and then move about in your own way. All right. But just so that way you guys understand where I'm at in my DeFi portfolio with a asset like Aptos, splitting that up into different ways, low risk, medium risk, high risk, and kind of what I plan to do with those assets right now as we progress in this DeFi ecosystem to generate yield.